Hey everybody, welcome back. Learn commercial on module number 5, talking about investment sales. So yeah, thanks again. I'm gonna put on my nice glare glasses. And by the way, I didn't even know, but I bought an extra little camera for my Zoom calls, and there's an HD button I'd never hit. So hopefully this looks a little bit clearer than the previous videos, but content's still great. So let's get started. Let's go. Man, look at that glare. That is crazy. Looks like a city in the background of my glasses. But all right, let me share this screen. Screen number 2. Share. Let's go. All right, investment sales. This is what I love to do. This is my forte. This has been more of my passion in the last 10 years. The first 5, I think I was just kind of figuring the game out. But I do love investment sales. So why should I look at investment sales? Well, number one, if you have and when you have the opportunity, you yourself need to be looking at investment sales. This is probably the fastest way to have massive jumps in your net worth if done properly. If you remember, I believe it was in the Jumpstart or Intro to Commercial Real Estate, we went over that deal in Dallas, my buddy did, where they cleared $2 million right off the bat. So massive opportunity to jump in your net worth. It's a great vehicle for cash flow. And if you look at most billionaires, they are heavy into real estate. So let's get into it. All right, what is an investment sales broker? You are a realtor who is assisting seller and buyers with acquisition or disposition of their commercial asset. This asset is not an owner-occupant property, but one leased by tenants. Now, you could be the occupant and tenant, and you could be sale leasebacking. So you could actually sell it to someone as an investment, and your company staying on with the long-term tenant. We see that quite a bit as well, called a sale leaseback. You are assisting investors with the purchase of a set of cash flows that happen to be in commercial real estate, or see massive value in repositioning the real estate so the next purchaser will be buying a set of cash flows. Either way, when you're looking to buy commercial real estate, it's either to get a big exit or for the immediate cash flow that it can provide. All right, 3 things you want to know when buying investment property: the amount of appreciation expected in the property. Now, of course, we can't always gauge that, but that could be a big factor if you're in a hot spot. The current, future, and or potential earnings of the property, the tax and lending issues or benefits of the property, right? Tax and lending can have a huge swing on what you can or can't do with the property. All right, so we're gonna jump over to my investment sales Word doc. Hang on one second, let me get there. Oh, there we are. Boom. All right, here we go. Investment sales. When you're buying an investment property, you're buying a set of cash flows versus buying just the real estate, right? That's what we just talked about. We see the biggest jumps in net worth through investments in commercial real estate. Now, this first couple paragraphs here are going to be over stuff we've already covered in tenant rep and landlord rep, but when you're looking at commercial real estate, there are leases in place, so you have to understand the leases, the types of leases, and items to pay special attention to, because you're going to be evaluating this like everybody else, or as an investment. So you need to know all these different deals, but we're going to run through these pretty quick. So commercial real estate, 6 categories, typically: special use, hotels, restaurants, sports facilities, and churches. Retail includes retail stores, shopping malls, community centers to power centers. Industrial, which includes industrial property, office, warehouse, or flex, which is the combo of industrial and office space. Garages, manufacturing facilities, and distribution centers. All right, healthcare, which includes medical offices, office condos, medical centers, hospitals, and nursing homes. Your multifamily, which is anything above 4 units, right? So the 1 to 4 stuff stays with residential. You can use residential loan, residential promulgated contract forms. 5 and above, you got to lean on the commercial, everything else, contract, lender, etc. Offices and office buildings, right? They're also mixed use properties, which have retail in the bottom and office and or residential above them, or a combination. All right, so the pros and cons of commercial versus single family investing. The pros, it's often less risky. You'll see a lot of the people say, look, I applaud you for buying, you know, I think no one will say don't invest in single family, right? Ever. If that's the opportunity you have in front of you to get started, jump in, right? Always get started somewhere. Don't analysis paralysis, and don't not jump in because someone said you shouldn't buy single family. If you have the opportunity, just jump in somewhere, get a little bit familiar, and then we can progress. Now, if you have the capability from day one to buy into a larger opportunity, generally speaking, we see less risk because you're going to have more units, more tenants, more things in one location. So if one tenant, two tenants move out, you still have money coming in. Where if you have 2 or 3 single family and for some reason 2 of the 3 or all 2 are vacant, you have zero money coming in, right? So it's just a little bit less risky at times. Not always, but if you can scale, with scale comes less risk. That's why you'll hear people talk in the investment world, it can be easier to find 10 million than it can to find $750,000 because the commercial lenders are leaning on the asset well more than they were on the single family side. So when you go buy a house, they lean on you. When you go buy a commercial property, they look at you, but they lean on the asset. It's often easier to find the money to buy built in 20 to 25% equity due to down payment. Now, right now, we're in 2020 in the COVID timeframe, and a lot of these lenders, not all, but a lot of the lenders have actually hedged more risk by saying we need 35% down. That was kind of the new target, unless you have a long-term relationship or it's an obvious win, especially on office or retail right now. I don't think you can get 20, 25% down. On multifamily and industrial, I think you can. Those two are pretty stable, but right now, office and industrial, they got just annihilated along with hospitality. All right, interest expense, principal reduction, more equity, options on finance structure, cost segregation, which we'll have another class on cost segregation. But in short, cost segregation is if you take, let's just take your personal house. So imagine your personal house is the model for a hotel where everything is just suites, right? You have all these movable things. You have movable plugs and wires and plumbing and walls and flooring and just attachments and doors and door handles and cabinets, all that stuff. Anything movable can have its normal depreciation life. It can slam it forward 5 to 7 years. So instead of having a straight line depreciation over a long period of time, you slam that down. And what that does is you take that depreciation and reduce it from your taxable income those first couple years. So it makes your first couple years extremely cash positive. So it's a massive win. But then when you go to sell it, there is depreciation recapture. It just makes those first couple years phenomenal. It's a great thing to look at, especially if you have any type of product with a lot of moving parts and you only plan on holding it for like 5 to 7 years. If it's a long-term hold, I'd take the straight line depreciation. Right? All right, equity built up in appreciation. You can also force appreciation, raising the rents, capital improvements. Cons, obviously a large down payment, 20 to 25%, maybe up to 35%. That's a big down payment. You might require multiple investors to qualify if they're going to look at you and you're not quite qualified yet. Responsibilities of ownership, maintenance, tax, management are greater. It's just a larger building, larger responsibility. Upfront capital, commission capital, capital improvement costs, right? Everything's a little bit more. You need to put more money down. The commissions on tenants coming in are much greater. Capital improvements are going to extend, but that's just with scale, everything scales up with it, right? No guarantee of rental income. Now that is across the board on both sets. Lack of options to buy and lack of options to 1031. One of the biggest obstacles I've always run into is if someone has a grand slam property, let's not say grand slam. If someone's had a property for a long time and their cash flow is at an all-time high, you know, they kept raising rents, they made improvements, raised rents again, made improvements. This has gone on for 7 to 10 years. Their debt has stayed the same. Their debt's about to come due, and they have the opportunity to either cash out, refi, or just get a new permanent debt structure in place because their note is due because of the way the commercial loans work. It's been 10 years, the note's due. Or they could sell it. The problem with selling it is right now we're having a struggle finding opportunities that make sense to 1031 into. So if there's nowhere better to place your money to get a better return or the same return, why would you sell? What options do you have options, but some people prefer just to stay put. All right. So what product types work best for an investment? In short, it really doesn't matter. It all depends on your end game and level of understanding of the asset class you're looking at, right? Most initial investors turn to multifamily because it's familiar and matches most of the aspects of a single family home. Most people also feel safe investing in multifamily as everyone needs a home, all right? That's why multifamily has been a fantastic asset class for decades. And it's gained a lot of attention recently with syndications. And when you do think about investing, that's one of the first things people think about because we've all lived in a house, we understand the mechanics, right? It's safe. When you think about everything else, it's a little bit scarier. It's unknown, uncertain, right? We most commonly see investors look at multifamily first, then retail, then industrial, then office. Large scale office is usually the highest level of sophistication, as we have to look at how to chop up large space, what makes sense, company mix, TI allowance, large commission payouts, parking, restrooms, and CO requirements. So the large office buildings can be probably one of the most challenging. But multifamily and retail, right now, the two hottest segments in 2020, we're in July 2020. And we're gonna keep recording these, but when we do live classes. So the next time we're gonna have a recording, this is gonna be a live class, and we're gonna have the live class recording. So hopefully these get better and better, and we start adding to, and adding documents and checklists and everything else. So if this is your first time watching this, this is basically the initial, and then we're gonna continue to add until this is just a rock solid in detail. We're gonna add additional videos below this, actually walking into product on our live transaction. So this is good stuff. All right, outside of multifamily, all assets will have leases. Let's revisit the types of lease structures and items to pay close attention to one more time, right? This is the third time we've seen them. All right, so full service gross, you got your base rent, includes all operating expenses and taxes. You just have one monthly rate, fantastic. It's common for most of the office buildings that when I first got started in Dallas, that's what they were. And we keep talking about when the market's hot, if the ownership has the capability, they're gonna shift gears to a triple net. In a hot market, triple nets are way better for the ownership because there's a high probability of the taxes, insurance, and or common area maintenance increasing in cost, and they get to pass that on to the tenants instead of taking on that burden. So obviously a full service or gross is great for the tenants, not so good for the landlord, and vice versa. Then you have your modified gross, which is a hybrid. You're gonna have some structure where a base rent and like taxes and insurance, but not common area maintenance, or insurance and common area maintenance, some combination of the two, and then your triple nets. So we just basically said what triple nets are. They cover your taxes, insurance, and common area maintenance. Just, I'll say it again, just get clarity on both sides. If you're on the ownership side, or if you're on the leasing side, landlord, tenant, whatever side you're on, make sure there's clarity. Everyone's on the same page with what's included in triple net expenses. Get clarity, because you can technically wrap up anything that it costs, anything the owner has to pay for to operate that facility, right? Then you have your absolute net lease properties, and those are fantastic. That truly is the closest to mailbox money we can get because the tenant is responsible for everything. Roof caves in, hail damage, someone drives into the side of the building, whatever it is. Tenant is fully responsible for all and has to continue to pay rent. Now, usually your return is lower because you almost have no risk. All right, so the areas to pay special attention to when working on or reviewing a lease. We've gone over this twice again, but let's rock through these pretty quick. And again, if you want more clarity on these, I think we go into much more detail on the landlord side in the tenant rep class. But for these, we're just gonna run through these kind of quick. Just make sure you have clarity. Just make sure there's no unknown or uncertainty here. Make sure you understand the commencement and termination dates. Make sure you understand what's all included in the operating expenses. Make sure on the operating expense escalations that you as the buyer, when you're the new owner, you can pass through escalations on those expenses. Services, what is required to be provided by the owner? You want to know that as the owner. Am I required to pay for electric? Am I paying for water, right? Just what services are we providing? Who's responsible for the HVAC unit? Fire and casualty, what are we all responsible for, from the tenants to the ownership? Indemnification, insurance, liability, and subrogation. Just read through those, get clarity. What is needed? What's the language say? Do you understand it? Is there something weird in one of the tenant's leases? Just get clarity. Tenant owner default. What happens if I'm the owner and something happens? What happens if I need to give someone a default notice? Subletting and assignment. Do they have them in their lease? ADA, hazardous waste. Make sure there's no massive ADA issues that haven't been addressed yet. Or what is the likelihood of one of those coming up soon? Options. Who's got options to renew and expand? Are there any amendments I'm not aware of? Financial review. What is needed during lease term, not pre-lease? Is your lender, as the buyer, going to require the tenants to provide financials in order for them to secure your loan? Is that in the lease? Can we get an amendment to add to a lease because your lender requires it? Zoning. Just make sure you understand what your zoning is. I'm assuming everyone in that place has a certificate of occupancy and they've already been approved for zoning. Just make sure. Tenant improvements. Just make sure before you buy a building as an investor, you're going to get estoppel letters. An estoppel letter, all that is you go to the tenant with the form and it says, all this information is accurate. There's no promises the landlord said, there's no free months coming up, right? Everything we're saying in this is accurate. You're not going to be expecting and come to us and say, you get 3 free months in your 3rd year. That's all it says. So with that, you want to make sure there's nothing like in year 4, the owner was going to repaint our building and give us all brand new glass. You're just looking for that kind of stuff. All right, operating expense components. Property taxes, property insurance, various maintenance, building, landscape, elevator, restriping the parking lot, property management, utilities, janitorial costs. Does your building have these and are you paying for it, or are they billed back to the tenant? If this is a gross lease, obviously you are paying for it. All right, so let's kind of hop in now. That was just kind of the run through the quick stuff. All right, when working with owners, understanding the needs, wants, and why are very important, as with tenants, buyers, sellers, you name it. Asking questions thoroughly will tell you what the most important factors are, and which can have some wiggle room. If this is their first commercial investment, this is where you guide them through the process and help them make the right decision. Remember, we are working towards clients for life, not a one and done. Customer service and keeping their best interests at heart are on top of the list, along with your fiduciary responsibilities. Learn to mirror and match the people you are speaking to. Know if you have an alpha high D or a social butterfly high I or an engineer high C, and learn how to proceed with each for maximum results. We've talked about that several times. Go take a DISC profile test, see what it's all about, see what you are and how you should relate to other people, because it is very important. You need to be able to adapt and switch gears according to whomever you speak with. An engineer wants to know everything about the contract, right? The high wants to talk about how the property looks and if the tenants are happy and nice and just have a great conversation with you. The high D say, I want the numbers, what needs to be repaired? What's the bottom line here? Is this a good buy or bad buy? That's it, right? So know who you're talking to and adapt accordingly. Knowing your market will help you navigate what is a realistic and unrealistic seller or buyer, right? If you know your market, they can't fake it. Our group is really looking for an 11 to 12% return right now. I mean, I can confidently say to them, well, then I can't help you right now. There is zero opportunity in our market right now. Just know your market. If you don't have good data, find it. CoStar, Reese Reports, go to Marks and Millichap, CBRE, any of the big firms, they pump out research reports. They pay thousands of dollars to have reports created and make public. Use them. I mean, a lot of them outline, this is the lease rates, this is the absorption rate, this is the occupancy level, this is the sales price, this is the cap rates, and they just give it to you, right? Take advantage. All right, lead gen. Always educate, lead gen, follow up. We're gonna repeat that forever. Goal here is to set an appointment. Don't sell on the phone, not yet anyways. Always come from contribution, be a resource, not a salesperson. This is the most important single thing we as realtors can do for our business. Don't forget to research the area you are calling. Be prepared if they start asking questions about cap rates, price per foot, what similar assets are on the market, and while on the phone, always ask things like, I'm glad you are keeping your asset. There aren't many like yours available. While I have you on the phone, is there anything else you are looking at buying or selling? Maybe show them one you really like or a unique opportunity, right? So when you are making these lead generation calls and they are an owner, always ask that question. I'm super happy that you love your asset and you're going to keep it. Is there anything else that I can help you find? Are you looking for anything else in our marketplace? Are you looking for anything in another state? Is there anything that I can do for you, right? You're asking for a lead. And if they hint around buying and you know of a pretty cool opportunity, show it to them, right? You can always follow up with that. Do you know anyone I can assist? Always ask for the business, right? If you got them on the phone, keep them on the phone as long as you can. If you don't ask, the answer is always no, right? All right, follow up. Input prospects into contact management system and update what they have, what they need, and how or when you should best follow up. If you have a drip system, ask if you can add them to it. Best systems will also allow you to set up a drip campaign to constantly have you in front of them as a reminder. You never know when the right moment will be, right? And I know the landlord rep class, I talked about it, but I had a guy who basically ghosted me for 2 years. And then out of the blue, he said, Robert, I'm ready to go. And I think the only reason he called me back was because I had an automated email going out once a month. Not a lot, just once a month. So every year he got 12 emails. Actually, I think it was like 16 because I had some of the holidays, but that was it. You know, just don't forget to set your times back. We're here if you need us. That was it. Nothing crazy, but it got my name in front of him once a month. If I had no contact with them for a year, there's no way I was getting that lead. It was great. We closed like $1.5 million property. All right, appointment. Dress to impress. Always dress professionally. First impressions matter. Arrive early. Bring any information you have on the market, the property, them personally. Past marketing material, flyers, OMs, offering memorandums to show how you personally market, depending on if you are looking to list their asset or gain them as an investment buyer, along with information about you and your business and or company. So just all I'm saying is just come prepared. Know who you're speaking with, know what your goal is, and come with data and information. Don't just show up by yourself with nothing. That may work later on when you have a much better, higher skill set where it just kind of rolls off. But in the beginning, just come with ammo, come prepared. No one's ever going to doubt your professionalism if you come over prepared, right? If you're brand new, use the company strength to stand out. If this is a person or company who owns multiple assets, look them up, right? Bring that info with you. How many buildings? What companies with? How have they performed? Does one stand out? This will show you are prepared and a professional. If you are dealing with the foreign national, research customs prior to meeting as well, so you are sure not to do anything offensive. And I talked about this the last class. Just as a simple example, when we're dealing with a lot of Asian cultures, it's polite and professional. When they give you a business card, it will be with 2 hands, right? Grab it with 2 hands. It's polite. That's the way, that's their custom. Just know who you're dealing with and be the professional. And also, so you don't do anything offensive, right? Like if you're working with some, the Japanese culture, right? You don't get your chopsticks and stick them in your rice bowl. Don't do that. You can research why. We meet much more often with clients looking to sell or list their property. Out of 10 buyers, I would say I meet with 20% prior to digging in, which is kind of crazy. Now I say that because I've been in this business a long time. but I will always ask qualifying questions first. So when I say that in the beginning, I try to meet with everybody, but sometimes I get in the phone call with people and I'm just coming from service. How can I help you? Again, I've already assumed I've won the business. They're already my client. It's my job to mess it up or get the job done. So with that mindset, to me, I don't even need to meet with them. Now I want to meet with them later, but my high D kicks in and I'm like, let's just get this done. And then once we go on a property tour, we go under contract, then let's go grab a drink, go grab a coffee, have our first meeting. That's just where my mind goes. It doesn't work for everybody. If you can meet with them, great, build more rapport, solidify that relationship. As you get better and better at this business, you're gonna figure out a way that works best for you. So I ask those qualifying questions first, right? What have you purchased? Where? How long ago? Are you investing with the group or solo? That's a big question. There's a lot of syndications right now. And the syndication, just where a group pulls money together and they have a lead syndicate, like a manager. He's in charge of doing the due diligence, investigating the deals, and then the group buys it together with the financial strength. But if you have one person leading the charge and the seller wants to see financials before he releases private information, that can be a challenge with a syndication. Unless you can prove this syndication just closed a $34 million property and a $50 million, they're qualified, right? If you can prove that, you should be good. But that is an obstacle sometimes we run into with syndications. All right, do you have a good lender? Are there any areas you don't want me to look in? What is the most important thing I need to look for? Things like that, right? I don't want to waste my time and I don't want to waste their time. I always ask myself, is the juice worth the squeeze? Because when I say that, if there's a doubt in my mind, I may make the decision not to work with them. If they're too unrealistic and I think they're going to shoot down every offer opportunity I send to them because their expectations are too great, then I may choose not to work with them. And that's okay. You're going to learn as you get in this business for a while. Some people are just fishing. They're going to tell you they're really serious, but they're looking for a very, very challenging product to find or sell at an astronomical price that makes no sense. So what you may be doing, some people just put a sign in the yard, they want the phone calls, right? I don't like to do that. I only want to work with people who I have high probability of closing. So I don't like to mislead people. All right, meeting. The first time you meet a client, show up early and do a quick walk around before your appointment, right? We talked about that before. Make some notes. If with the buyer, just recap the market info before you walk into the meeting, right? Okay, we know we need to look on the north side of downtown, north side of CBD in this area. This is the vacancy. This is the new product coming on board. These are the lease rates. This is the sales prices. These are the cap rates. There's only 3 or 4 opportunities in this area. But if we can deviate a little bit, there's all these other opportunities. So, we have to stretch our clients' expectations a little bit sometimes, because if people are this is my circle, they're not willing to look over here. There could be an amazing opportunity. Sometimes you just have to show it. Just be careful though, because if someone shifts gears on you quickly and says, no, I said CBD, I said downtown, then just drop it, right? Don't show them opportunities outside of there. All right. Always act confident, stand straight, look them straight in the eye as you are introduced or are introducing, and give a firm handshake. I keep saying this again because it is important. Do not give a weak handshake. I don't care who you are, male, female, doesn't matter. Firm handshake. Nobody likes a weak handshake in business, period. They don't like it. It's simple yet powerful. Remember, mirror and match. You need to know whether to jump straight into business or build rapport relationships first. When in doubt, start building rapport first. You will know quickly if you need to shift gears, right? Gauge how the conversation is going and quickly determine if you need to continue down that path because they are engaging you and they're listening to you and they're responding, or if they're not talking and you need to get down to business, right? Just learn to adapt and shift gears quickly. I always assume I'm winning the business, right? Like we talked about. So when I walk in, this is my listing. I'm just going over my action items to get it sold, or what I'll be doing in order to make this a win for the owner. I don't wait, I presume. I tell the owner, awesome. We can certainly get this shit moving full steam ahead. I'll get that office paperwork over later. Do you mind if I go take a couple more pictures for now until I get my photographer out, right? Because I may have someone now. Let me get these pictures because I have 2 people in mind I want to send this to. It's a presumptive close, right? This is my listing. It's also your listing to lose if you don't do a professional job day one. I also always presume I will win the opportunity to find an asset for a buyer, right? I come in very confident that I have all the tools and skills necessary to find the asset that makes the most sense for their needs. Or I can explain why this asset is the way to go. I know my market, I know the product types, I know why this will win. They sense that, they feel comfortable because I know. If you don't know or find it iffy, bring a seasoned veteran with you. If you aren't going to close them, somebody else will. They're going to buy from you or someone else. Someone's making a sale that day. It's either you or them. You on the property, or you on the reason they're going to use you, or them on why they're not. And that's just a fact. Lastly, for buyers, ask as many questions as you can when you have FaceTime. Not FaceTime on our phones, but when you have face-to-face time, right? That caught me off guard for a second. I read FaceTime and thought my phone. Also, ask, are you working with anyone else on this search? Now, the reason I ask, if your client has $20 million and has to place it in 30, 45, or 60 days, they rarely can afford to have one person looking for assets, right? That's just, it's tough. And I run into it plenty of times, and some people have a hard pill, it's a hard pill to swallow. They want loyalty. Well, put yourself in their shoes. I just sold my property. I'm set myself up to pay capital gains taxes. I don't want to pay capital gains taxes. I want to buy another asset and roll my money into it. It's being held at an intermediary right now with an exchange. So what if you can't find the product I need? I can't afford to pay the $2.5–3 million tax hit. So I need all 10 of you to go out into the field and go find me something. That's why they use a lot of agents. There's not a whole lot of loyalty on the bigger numbers. It's, look, hey, I want to work with you, Robert. If you find me this deal, you got it. Let's rock and roll. I trust you. Let's make this happen. But I can't afford that. So if John over here brings me the deal, then I got to go with John. Now I'm going to buy again, so I'll stay in touch, right? That's the way it is. That's why I mentioned several times, if you find the right deal, the money's easy. If you find great opportunities, there are buyers. But that's one of the hard things to do, finding great opportunities. Let's see. Okay, so, speaking of that, they need multiple people looking in multiple states for anything that makes sense sometimes. This happens a lot, right? Be prepared. This is why it's so important to have a great list of buyers and sellers and what they have or what they want. Even if they aren't ready to sell now, you know what they have. So when that buyer comes along and says, this is what I need, you can make a call and have the best chance at not only winning the opportunity to look, but may actually get the deal done, right? That's why I mentioned before that's one of the great things about these big firms. They have this massive database they've been building for months and years and decades, and it's been filtered, and they know who's buying assets now, who's buying hotels and office and retail. That's one of the biggest wins they have. They have that massive database. So if you don't have that database, start building it. People you talk to, put them in it, add, build that database. If you get a big enough database, like I mentioned before, it's never the company you work for. It's the people you are surrounding yourself with and what you do as a broker. It's not the company. They don't go on the listing appointments with you. If you want to make the most money, you need to be in control of your world. And to get control of your world, you need to be a master lead generator. So let's go. All right, now down to business. Ask questions, right? Find out the what, why, where, when questions. Listen first and write down notes and repeat back to them to make sure no mistakes or possible expansion of an answer is needed, right? Here's the typical information needed, and hopefully you already have the answers prior to meeting. But sometimes, they've never invested in a commercial property or sold one, so they're unsure. So we're gonna have a list of this in the resources. Year built, type of property, location, size, items of interest. Is there a crane in the industrial side, right? Multiple elevators, backyard, patio, et cetera. What other tenants are leasing? What would a typical tenant be for this asset? When is the last time any capital improvements were done? Are there any items of concern? What is the zoning? Are there any restrictions we need to know of? Can't have another brewery or can't have advertising in windows, for example, right? And for a buyer, it would be more along the lines of what asset class, what area, what cap rate, what cash on cash return? Do we want stabilized or does this need to have upside? Is there any areas you don't want to look? What if I can find a great opportunity in a different state? Would that be okay? What do I need to find in order for you to pull the trigger, right? What's going to get you excited in order to say yes? You know, how much time do I have? Is anyone else assisting you? Just ask questions. If this is a new property for the owner or the first they've ever owned, a few more items may need to be covered. Have you ever owned any other commercial assets? Have you ever owned this type of asset? Why did they buy this particular asset? What makes it special? Are we going to be 1031ing this property? Right? Figure out the why so everything we do moving forward can help get closer to that answer. That's why you want to ask questions. What is the end goal here? And then everything is driving us towards that end goal. It makes everything easier. All right, proceed with expectations. When you will get back to them, how often they like you to communicate with them, email, text, call, timeline of events to come, right? Some people like daily updates, some people like weekly, some people like only when you get a call. When leaving, always thank them for the opportunity to assist them and ask for the referral, right? I really appreciate the opportunity to assist. If you know anyone else I could be a resource for, I would greatly appreciate the introduction. Thanks again, and I look forward to speaking with you soon. If I know I have the deal locked up, I alter that last sentence. Thanks again, and I can't wait to get this sold, or some variation like that. Same for the buy side. This is what I would like to do, so I want to make sure we narrow down to what makes sense for you, right? This is what I tell. I say, I'm going to send you kind of a shotgun list, right? This way, we'll have a few different areas, types of real estate, some stable, some not. Please just review and give me as much feedback as possible. The more we know, the more we can narrow down and really get down to the right property, right? I'm not going to say no for you, so I want to send you as many different options and variables as I can, and so you can tell me no, no, yes, yes, no. And therefore, I'm not going to waste your time ever again with those type of assets. This is where my time is spent, and I know why, because you gave me feedback, right? Right. The more we know, the more we can narrow down the search. Remember, just because you don't like or do like something does not mean your client does or doesn't. Don't kill a deal based on your feelings. Upon arriving back at the office, write a thank you note and send it. Don't wait. The small things mean the most. Get into action. Further your research. What is the price per square foot, cap rates, time on market, lease rates, number of properties, vacancy rates, new construction in the local market, right? What is available for your buyer? Follow up with the properties you think may work and make sure they are available before sending. Very important, right? Most brokers, they don't constantly go back online and adjust their marketing to show this space is gone, this space is gone, this property sold, this property's back in the market. They just don't do it. They're busy. Some do, but very few. A good practice is to call the other brokers listing or looking for properties and ask questions. How has the market been for you guys? Has there been a lot of activity, right? So you're calling the other listings in your area because that's going to give you feedback if you have a listing. I'm checking on the neighboring properties, so if we aren't a fit, we might be able to send them your way. Would you mind sharing what y'all have available? Have you seen anything your buyer didn't want, or was it out of price range, right? Just ask questions. Use the broker environment to your advantage. The chart below applies to leases and purchases. We've already seen this twice now. But that 7 to 10 year real estate cycle, and this is just kind of what we see, right? We have low vacancy, then the prices go up, then you have new construction starts because they realize there's not enough product, then you have an oversupply because they overdid it, and then you have high vacancy, then you have declining prices, then you have absorption of excess supply, then again you have low vacancy. I mean, it's just, right, it's a circle. Now we've had the longest run up in a long time. It's been 10 years of amazingness. And a lot of supply was built. A lot of office, a lot of industrial. It's been a crazy 10 years. All right, pre-marketing for the listing side. Okay, so listing paperwork is signed. Right now, what? Right, you get with the owner and/or property manager to get an accurate rent roll showing square footage occupied by what tenant, how much vacancy is left, and how many suites. Make a list of the condition of the vacancies and occupied. You will need to explain, highlight the good aspects of your property, and know the answers to the negative or reasons why things are the way they are. The buyer and/or broker will ask. Right. Get a site plan showing full footprint, where the demising walls are, et cetera, of each suite. Get a floor plan for all individual suites that are vacant. If the owner doesn't have one, help them find a company in your market that can create one at the owner's expense. Get them to pay for it. Don't pay for this. Hire a professional photographer to take aerial, exterior, and interior pictures. Get a GC to come out and give a ballpark cost to general finish out, right? So get them out there just to, if you have a friend who's a GC, get them out there to give you some ballpark cost to finish the vacancies out. Just enough to get them usable, nothing over the top, and cost for any deferred maintenance you may need to have done. So you can better inform the buyer while you're showing this property. Now, this is on the listing side, right? So you're with the owner. So all you're doing is you're curbing the time that they may need to do due diligence. You're kind of doing the diligence for them. You're saying, look, we understand the cost to get that part of the roof replaced and the siding done because of hail. We already know these 5 windows need to be replaced. We've already mapped out the property for a future buyer with all these grids. You can see all the property, the vacancy, where the walls are, et cetera, et cetera. And this is the cost to get these finished out to general office, retail, or industrial space. Here you go. You're just helping them with due diligence. You're helping them speed up an informed decision. Because the last thing you want to do is go under contract, be under contract for 60 days while they investigate themselves. Then it turns out the property doesn't work. You just wasted 60 days. If you just give them all this information up front, they can make a informed decision much quicker. And most people don't get that GC. I think it's just a smart move. Right? Put as much of the info as possible into a marketing flyer and offering memorandum. This should include name of center, location, demographics, characteristics that are a bonus or a positive for the site. Include the pictures, floor plan, square footage of the center, vacant suites, tenants leasing already, asking lease rate, and if it's a triple net or gross lease, unless the owner has said otherwise. Financial analysis, financial projections, capital improvements completed, cap rate or pro forma. Possibly show lending options and how the numbers look with that in place comparable, right? Do not use the LoopNet flyer. Have it look professional, right? There's several companies out there you can use to make this look professional. We're gonna have some resources with the discount should you choose to use those. You can also use like Adobe and create some cool stuff. It just takes a long time. Make it look professional. All right, marketing for the listing side. The goal here is to get it in front of as many people as fast as possible, right? Generally speaking, we all do this. Send to your database, your social media, post on LoopNet and CoStar, some to the MLS, Crexy, Brevita, whatever makes sense for your market, right? Anything that may make sense depending on your product type, market to the other brokers in your area. I said a little weird. All right, Crexy, Brevita, anywhere that may make sense depending on your product type. Market to other brokers in the area, right? All those things need to be done and in a timely manner, right? Call the other investment brokers you know or can find and ask if they have anyone looking. Post on social media that you are looking for retail or whatever asset class investors for a great opportunity in XYZ city. Be proactive. We aren't getting paid to make flyers and OMs. We're getting paid to sell, so let's sell, right? One of the things I did not like about the big shops was people kept telling me like, if I got this amazing listing, it's going to my database first, my personal database, then it's going to my office database, then it's going to the company database, then it's going to market. Well, that's great because the company wins because they get the double side the deal. It's not great for the consumer because the consumer is expecting you to get this in front of as many agents, brokers, and people as possible to give it the highest probability of selling for the most money as possible. So I didn't like that. And they still do that, FYI. All right, I still do this again because it depends on your market. Some markets doesn't have a great CoStar presence. Some markets don't have a good Crexi presence. Some markets don't have a good LoopNet presence. Just find out what your market is using at a high level and focus your energy there first. Like this is CoStar. In Austin, the same area, this has 121 for sale records. I can't, on office, just office. So if you look on the right there, I just type a property. I know I can do it again. I keep pointing at the screen like you're like seeing me point. So on the right side, I checked office, and then on the bottom there, I checked investment. And there's 121 for sale records in that part of Austin, Texas. Now, if I do that same thing in Crexi, I'm sorry, this is what it looks like if I clicked on one of those properties. Now, if we go down to Crexi right there, there's 32, right? So 121, 32. That's why people use CoStar. It's a challenge. And Crexi is picking up a lot of speed. They're catching up. If you also want to check out off-market opportunities, you can use Reonomy. They're another great resource, and hopefully we're going to get with them here real soon and have a discount code for Reonomy as well. All right, property searches, investor buying, right? Once you have met and compiled all the criteria you need, time to find that asset that works. As I mentioned earlier, I don't want to say no for them, so I stretched what they told me they wanted and send a larger list covering several different areas and price points and returns. Then I follow up. I want to make sure they receive that email and to reiterate that this is strictly to get feedback. I don't want them to think I'm wasting their time. I don't know what I'm doing. Again, I'm not being lazy and just sending anything. I want feedback. This will help narrow down my search and really get a better idea of what the winning product will look like. That's why I always preface, if I'm going to do this, I am going to send you a shotgun approach. This is why. Don't just do it. Preface that. Tell them why. All right, you get the call or you make the call. Investor broker. His name is John. Hey, this is John. Saw your listing at 123 Main Street for sale. Is that still available? Hey, John, thanks for calling. Yes, it is. Awesome. Do you have a flyer or offering memorandum you can share? We do. What's your email? Okay, just sent. Let me know if this fits your client's needs. Okay, so John and his client reviewed the flyer on OM. My client has interest. Can we come Thursday noon for a tour? I'm sure I can make that work. Can you tell me a little about your buyer? Has he purchased in this area before? Anything recently? Does he still own anything? Is he a cash buyer, right? He has the money, but we'll take advantage of the low rates. Everyone should be looking at interest rates right now because it's the lowest we've seen in forever. So if people are cash buyers, man, try and encourage them to get a loan. He owns one in Houston and one in Phoenix, just looking to expand his portfolio. Great. Looking forward to seeing you on Thursday at noon, right? So you want to ask questions to kind of gauge the seriousness and the, if this person has a portfolio, if they've bought before, you just want to understand who you're meeting. We get these calls all the time from sign calls, CoStar, broker community, et cetera. The more listings you have, the more calls you get. When you start picking up a larger number of listings, you will quickly realize you need support, right? You need a great admin and possibly a showing agent. If you have 40 listings, awesome. There could be days you have to show 5 to 6 properties. You won't have time to respond to calls, texts, emails. Make sure you saw and forwarded that LOI for a purchase after you review. Help review a PSA. Communicate back to your client on progress. Lead generate. Follow up with anyone. Right, the list goes on. There's a lot of stuff we have to do any given day. That's why time blocking is so important. And when you get too many listings, you lose track of the time block because you won't have the opportunity to go show your clients' properties without getting some help, right? This is a great problem to have, but get help as soon as you can. Never stop lead generating and following up well, right? Educate, lead gen, follow up. Just got to keep doing it, right? On Thursday, per above conversation, you show up, talk about the property, answer questions for the buyer, or assist your client in asking questions. You walk the interior, you walk the exterior, the interior of the spaces that you can or are vacant. Remember, we never want to disturb the tenants. We don't want them to know it's for sale because we don't always put a sign out front. We don't always advertise, right? A lot of times it just changes hands without them knowing. When asked, we generally say we are insurance adjusters or something like that. right? Ask qualifying questions while on tour if you are the listing broker. And for the buyer, always ask questions about condition, happiness of tenants. What have the maintenance requests been? Are there any outstanding? What is the biggest issue you have had here? Why are you selling? Wherever the conversation leads, stay in curiosity and dig so you know the why as best you can. Always ask for the close. Should we get this typed up, right? Now, of course, there are different variations. You should probably ask that. I've never said it just like that. But since you already know the area, know the availability, and know where you fit in price-wise, you know that, or you know what most likely your owner will and won't agree to based on the current market. So if you take a listing in a specific area, you should know how many other products are similar to yours and on the market, at what price, what cap rate. Is this the best in the market? Are you in the middle of the road? Do you have a more of a unique opportunity for upside? Where's your selling point? And if they come looking to buy your property, what's the likelihood of you getting the best price? All right, so let's assume you get notified later that day or the next day. Hey, Robert, we're gonna be sending you a letter of intent. Thanks again for showing us that property, John. All right, so we jump in, letter of intent. Negotiations are for a purchase. I'm sorry. All right, purchase, letter of intent. Negotiations for a purchase generally begin with the letter of intent. These documents are non-binding and for the most part hold no legality behind them. The LOI is geared towards getting all major items discussed prior to moving forward with the PSA, the purchase and sale agreement. The buyer's broker will go into as much detail as is necessary for his or her client. Please look at the LOI form to see specific items covered. Either side can add or alter items as needed. If you look in our resources and below this module, we have a letter of intent for you to review. We also have a PSA, a purchase and sale agreement, written by an attorney you can review as well. But generally speaking, the seller cares about a few things: purchase price, timeline of events, due diligence, feasibility timeline, timing of closing, experience of the buyer, and ability to perform, right? Their qualifications. Are there any contingencies, right? And how long am I going to be taking this property off the market based on the other questions? And are they going to be any options to 1031 my property into? These are things they start to consider as we move down this LOI, right? We know what the current market is telling us. We know the price per foot, the cap rates, and what the lenders will look at. So we generally know what a fair market price will be. The rest is just the motivation and negotiation skills of the seller and or buyer. For example, we just received an offer for $5 million on a large land tract in Dallas. Before we finalized the LOI and moved to a purchase and sale agreement, my sellers called me and said that cash was actually what they needed and they wanted it now. Well, that doesn't usually work in our favor, right? So I asked, what does that look like? And they told me they wanted this to close in 45 days. Now, closing a large land tract in 45 days is pretty darn difficult, right? There's a lot of potential moving parts: funding, permits, plans, et cetera, et cetera. Usually that's just a no chance. But, you know, I asked, well, how much of a haircut discount are you willing to take for such a fast close? They said $1 million. Okay, well, that might get their attention, right? So now it was my job to go sell that. $1 million price reduction for a 45-day all cash close, right? It's crazy how things work, but you know, strange things happen all the time. And we got it done. One of our jobs is to reduce our client's liability. This is why we ask so many questions on who the purchaser is, what are their financials, are they an investor, are they a new investor, right? The owner doesn't or won't want to take their asset off the market for 2 to 5 months, then have it come back on. Perception is reality sometimes, and buyers may think something is wrong and try and lowball you in the next round. The reality is, buyer could have got cold feet, found a better option, had investors bail on his fund, couldn't get approved for the loan, who knows? But perception is reality. Minimize the liability as much as you can. Always remember, if you are working on the investor side and they keep wanting to write very, very low offers, the commercial community is pretty small. Word will get around. If you are constantly writing low or or not performing on deals, you won't get a response back, and brokers inform their sellers to steer clear of you. So just be wary. Is the juice worth the squeeze, right? Maintain your integrity and only work with good or great clients. In addition to the LOI, the owner may request a list of assets owned or something showing any level of financial capability, right? Because again, they don't want to take this off the market and have it come back. Bank statement, asset owned, anything showing you have capability to perform. Not always, but sometimes, right? The longer you're in business or the more assets you close, this will go away because people know who you are and know you can perform. So the longer you're in this business on the broker and or buyer side, people just get to know you deal with serious clients, and you're not going to waste their time, right? Don't let it go the other way. Also remember, it's not your job to kill the deal. Show the facts, figures, opinion. If the owner still wants to do a deal you advise against, get it done. He is taking the risk. All right, purchase and sale agreement, PSA. All right, once the LOI is accepted by both parties, we move forward with the PSA or contract. Generally, the owner has a contract form they use, they know and like, know if this is the case or not, and prepare accordingly. We generally see the owner's broker and owner type up the actual PSA or contract. Make sure everything discussed in the LOI has been placed in the PSA or contract and has the correct wording, right? Pay attention to the timelines of events. The devil is in the details, so reading thoroughly will make sure you are covered. Always advise your client to seek approval of an attorney. I will review this document and come back to you with any concerns I have. However, I am not an attorney, and should you desire one, we encourage it. Protect yourself always, right? If this is your client's PSA or contract, we don't really have issues here. Once agreed upon by both parties, make sure everything is signed properly. Your PSA contract document is now executed, and the dates and activities set in the agreement begin. So congratulations. Now it's time to get to work. All right, so due diligence feasibility period. All right, now the real investigation begins. All right, pay attention to the timelines here. Ask the title company for a critical dates list. They'll send you when the triggers are for feasibility, for title, everything else. I just said that. I like to ask title for a critical dates list showing all important dates. When is title commitment due? When does due diligence end, etc.? Not all title companies will provide that due to liability. If they don't, I don't know why I keep saying this. I'm talking before we even get there. So if they don't, I send an email to the other broker and say, it looks like these are our dates. Is that what you see as well, right? So you just want to make sure we're all on the same page. Like, I'm seeing July 31st as the end of our feasibility. Is that what you see as well? Yes, yes, yes. Good. If anything changes, we have a record. Get on the same page. In the LOI, we ask for any and all information that will help us make the right decision, such as tenants' leases, cash flow statements, tax records, insurance costs, management agreements, vacancies, the roof is intact, no major issues that they didn't disclose, no liability or lawsuits are going on that we didn't know about, no liens on the LLC, really anything and everything we need to verify in order to make sure this deal is exactly as we expected and are prepared to purchase. Validation of purchase price and risk we are willing to assume, right? So anything you're requesting, asking, if you specifically write it out in the letter of intent and or purchase and sale agreement, does not mean that's all you get. At any point in time, if you need more information, a different set of information, anything, you can ask, right? During feasibility, you can get out of this contract for little to no risk. So you need to make sure you're asking all the right questions to get the information you need to make sure you feel comfortable. That's really what it is. How much do we need to get you to feel comfortable to pull the trigger and say yes? Not only you, but the lender. So you may want to follow up with your lender, make sure they have all that they need as well, right? It truly depends on the complexity of the transaction as to how long you may need for this feasibility. If you have a 400 unit multifamily complex, you may need 3 months to get through all the items necessary. If you're already familiar and buying at a great price, you may only need 30 days. It all depends. Sometimes you need a week because you got an amazing price. You already know the property. It's not really a big deal. The reality is, as a buyer, you just want to know what you are buying and get comfortable with it. As a seller, you want this closed in a reasonable amount of time. I would say our average property has 45 to 60 days of due diligence. That's probably a good average. All right, commission agreement. Make sure your commission agreement is mentioned in the LOI and transferred over to the purchase and sale agreement, or you receive the separate agreement showing the commission. Sometimes in the LOI, they say commission per separate agreement. Just make sure you get that before you finalize this deal. You want to make sure they got you protected in there. All right, closing. So closing can take place anywhere from 1 day after due diligence / feasibility to months later. All depends on what was negotiated during the LOI phase. Some buyers choose not to begin the financial loan process until they have completed due diligence. Some people wait to close once they have engineering drawings and permits from the city, right? It all depends on what you negotiated. Land sometimes can take a long time because they have to get engineering, permits, et cetera, et cetera, et cetera. And some are already a structure which already has a lease in place. They don't need to wait that long. This varies from property to property. We have closed in 30 days total, all the way to 18 months. I would say our average transaction, we have 45 to 60 days of due diligence and 30-day close after, right? That's probably a good average. I think the fastest I got done was 14 days, and that was a freak occurrence. Right? Congratulate your client, come from contribution again, give a card to Office Depot, lunch on you. Again, get creative if you can. Research their LinkedIn, look at their social media profiles, see what they like to do, what their hobbies are. Read giftology, get some really creative ideas. And then ask for the referral. Unlike residential, I rarely attend closing. I mean, generally the docs are mailed ahead of time or done on my client's timeline. Most of the time, this isn't their first rodeo, so they don't show up at the title company anyways. I've only been to a couple, but again, know your clients and make the call whether to go or not. If you think it would be impactful to them and meaningful, then go, right? Just know your clients. All right, now follow up. Keep touching base with your client to make sure everything is going as planned. 30 to 90 days after closing, reach back out, again, just to see how things are progressing. Shows you are a professional and you value them as a client. And given if you do this well, you have a great shot of helping them with their next purchase, right? And always ask for a referral of anyone you may know who needs commercial real estate assistance. Always ask for the referral, right? Well, awesome, guys. Well, we're going to go back to the slide deck real quick. I know that was a lot of information. Let me see here. Where is the slide deck? There it is. Let's go. All right. Let's rock through this real quick. All right. How to value your commercial asset. Did I skip to? There you go. In today's market, I wrote this in 2019. Our first glance is at cap rate. Right? Everyone talks about cap rate. Well, in most markets, cap rate's the prevailing term used. The cap rate is a basic snapshot of the asset as of right now. And it basically says, if I invested 100% cash, so no loan, into this asset, that would be my return. So if there's a 7% return, if you put 100% cash, that's your return, 7%. Our favorite number here is NOI, right? Net operating income. This is the net income after you have deducted all operating expenses for the property and right before you pay debt service. All right, the other two most common ways to evaluate are cash on cash and IRR, internal rate of return. So the cash on cash method shows your return based on how much cash you put down and the pre-tax net cash flow. We'll show that here in a second. The IRR is a way to evaluate your return on your investment over a period of time. For example, over a 5-year hold, what am I projecting to happen and what does that look like for my cash flow and my return? There we go. So here's kind of the cash flow model, how they get these numbers, but you generally have potential gross income. That means if it was 100% occupied at $28 a foot, whatever, potential gross income, you subtract out your vacancy of the gross income. So if it's 30% occupied, you subtract 30%. And any additional income, if you have a laundromat on site or if they pay extra for parking under an awning, whatever it is, you add an additional, that's your gross income. Then you subtract expenses, all operating costs, insurance, taxes, CAM, property management, you name it. After you subtract all expenses, you get NOI, your net operating income. This is before all debt service, right? So there's your NOI. Then you subtract out your debt service, and then you get your pre-tax cash flow. All right, so see cash flow evaluation tools. Now, if you go to the resources and below this, there's going to be a link to them, but we have two. We have actually, we have more than two. We have a simple, and then we have a complex. We have a blank, and then we have one filled out, so you can see what it looks like. And then we're also able to use the Analyst Pro. Should you choose to sign up for that, we get a discount on there. It's a great tool, and it makes this really easy if you don't want to plug in the numbers yourself. But here's an example of a cap rate, right? Net operating income divided by sales price equals cap rate. If the net operating income has if the net operating income for a property is $100,000, for example, and the sales price is $1 million, you divide the 100,000 by the million, and the result is 10%. And that'd be a great return. We don't see many of those anymore. Essentially means that if an investor pays cash for the property, he or she can expect a 10% pre-tax return on investment from the income of the property. And there's another example. At the bottom, showing a 5.4% return. Cash on cash, if we needed to put down 25% on this million, and the net operating income is still 100,000, the debt service on that is $55,731.12 at a 4.25% interest on a $750,000 loan amortized over 20 years. So I'm just adding back in debt service so we can get a net pre-tax number return. So the pre-tax net income is that $100,000 minus your debt service, your principal and interest, equals $44,268.88. Now, to get your cash on cash, to show you what you're going to be making into the year, I'm taking that $44,000, your pre-tax money, dividing it into my down payment, which is 25%, equals 17.7% cash on cash return. And yeah, so this shows the return on the cash paid up front or at purchase. It doesn't include anything else, right? Any repairs or anything else you did in the property. All right, so action item number 1, homework, and we will have more posted. Complete the following exercises just to get an idea of how to start calculating. An apartment building is selling for $1.2955 million. The NOI is $87,500. Please calculate the cap rate. Number 2, an industrial building is selling for $7.375 million and has a cap rate of 6.15. What should the net operating income be? A mixed-use property has a net operating income of $378,965. Cap rates for other similar properties in the area have been trading at 5.8. What should be the value for this property? Action item number 2. Complete the following. Find a property for sale in your marketplace. Find the sales price and get the net operating income and calculate the cap rate. How does this cap rate compare to other assets that are currently on the market in your area? Is this a good deal? What would make this a good deal? Cheat for remembering cap rate calculations. It's the ERV formula. If you have, where I equals NOI, R equals cap rate, V equals value. If you have 2, you can always find the third. And that is it for the slideshow. There you guys are. All right, guys. Well, thanks so much for this time today, going over Module 5, investment sales. There's a lot that goes into the investment sales side, and we're really going to dive into the meat and potatoes of a deal when we have a live deal analysis going over a live transaction. It's probably going to be on a multifamily transaction, but I can't wait for that. And thanks again for your time today. If you have any questions, use the mastermind community, and we'll talk soon. Thanks, guys. Have a great one.